What's going on, guys, and welcome back to another video. So I thought we'd do a bit different this week in terms of my portfolio updates, and we'll have a look this week at how my best performing sectors are performing. So we'll have a look at my worst to best performing investments in terms of capital gains and percentage increase, and we'll also have a look at my 5 best performing stocks and my plans going forward. So with all that being said, let's dive right on over to Trading212. So just a brief overview if you're new around here. So at the moment we have about €10,863 in this account overall. Of that we have €8,685 invested, and we're up €1,888 and 26 cent, or 21.74% profit. Now this portfolio consists of 33 blue chip diversified stocks that I currently dollar cost average into. So when putting this video together in terms of making an Excel for these sectors, I was quite surprised at the performance of some stocks and sectors. For example, my financial sector pie, although it's still one of my best performing pies, I thought it was doing a bit better. So again, it's always a very good idea to kind of put down on a blank Excel your performance of your investments overall, because it's a lot kind of more black and white and you'll see how it's actually performing. Now also, another thing I was surprised with was that a lot of my stocks are doing very, very well, thankfully. So that kind of does suggest or pose the question of, do you actually start taking profits? Now, I made kind of videos in the past, which I link in the description below, of a potential stock market bubble, which everyone's aware of, I know that, and that the kind of bull run might be coming to an end, again, because a lot of stocks are overvalued. So again, we'll discuss kind of my plans at the end of this video for my stocks going forward. At time of recording, 3 of my 33 stocks overall are currently in the red, which gives me kind of a success factor of 90.1% at the moment, which I'm quite happy with. Now, again, as I mentioned in prior videos, I'm quite happy to see some of my stocks in the red, because it just means you're getting at a discounted price, which in the long term, you're getting an overall cheaper average cost, making more of a profit. So now let's jump over to the Excel I created a while ago and see how my sectors and stocks are performing. So at this moment in time, 2 of my sector pies are in the red. We can see at the bottom here the cannabis one, which has high tide. The sole occupant in this pie is down 23.66%, or €76, which certainly is my worst performing stock of the 33. However, saying that, going forward, I will actually, if anything, be buying more, because firstly, it's down 23.66%, and second of all, after doing all my research over the past few months, in terms of fundamentals and catalysts, I really do believe long term, this has huge potential. And then materials, which is my newest pie at the moment, is down about 4.9%. Again, we only have about €175 invested here, and are down only about €9. But again, in here, it's Barrick Gold and First Majestic Silver. 2 stocks here, because we have so little invested, will be very easy to dollar cost average into and get back into the green. Now, it's also worth noting that I could have done this kind of leaderboard in 2 ways. Firstly, percentage gain, or second of all, monetary value increase. So I went with the latter, the monetary value increase, even though, for example, we can see here that industrials in number 8 is up 25%, which is a lot more than consumer staples. However, the monetary value is about double, if not more. So we can see here in number 10, we have real estate, up about 20.6%. We only have 1 stock here in the form of realty income. We then have the energy pie, up just under 7%. Now this would be up an awful lot more, which we'll see later on, because of the iShares Global Clean Energy ETF is really dragging that pie down, and it's overweighted in that pie, hence why I haven't invested in a while within that ETF. But we'll even see in my top 5 performing stocks that there is an energy stock in there that's up a lot more than 7%. So again, at the moment, I'm quite happy. I still have €55 in the green. We then have industrials up 25%, or €68 profit. Again, we only have about €340 invested here, and I haven't invested further into this pie in a while, mainly because they have been in the green and there hasn't been an opportunity to dollar cost average. We kind of start going up to the bigger numbers here then in consumer staples, where we have €1,367 invested, up just under 15%. However, because we have so much invested here in comparison to the others, it's still up €178. Then in 6th position, communication services, we have €759 invested, up 32.76%, or €187. Again, another example here where we can see ETFs in 5th position is up 31%, which is over double consumer discretionary. However, we have more invested in consumer discretionary, €2,051 to be exact, and we're up €268 in comparison to ETFs €203, although again, ETFs are outperforming that pie. And then in 4th position, we have the healthcare pie with just over €1,000 invested. up 26.39% or €209.85. We can then see my top 2 performing pies at the moment. Now again, as I mentioned earlier, I thought financial were up a good bit more than 37%. We have €1,250 invested and are up €339. So again, I thought that was close to the 50% mark, and it just goes to show the importance of kind of getting away from your broker and just putting a black and white onto a blank Excel, because it really does make it stand out and it really puts into perspective how you're actually performing. And then my top portfolio pie or sector at the moment is still technology, with just under €1,600 invested and is up over 40% or €454, which I'm very happy with. Now before we have a look at my 5 best performing stocks so far in my portfolio, it kind of is, if like for example if I was watching this video, I'd be like, hang on, that doesn't seem like a whole lot of increase. For example, €50, €187, 200, etc. However, you need to realize that this compounds over time as well, and this is 33 stocks or ETFs overall. So if you had a look at my Trading212 portfolio, which we'll have a brief look at in a second, there's 33 stocks / ETFs, and all are well, 30 of the 33 are in the green, and all of those kind of small gains really do accumulate. For example, if you add up all these gains and losses, it equates to just under €1,900 in profit, something I'm very happy with considering it is a blue chip diversified portfolio, so the kind of swings in terms of gains and losses are a lot less in comparison to penny stocks. For my 5 best performing stocks / ETFs at the moment, we actually did the opposite here in terms of going for percentage gain instead of capital gain. So again, we can see here that the 5 to number 3, we have 2 financial companies in 4th and 5th position. Again, that's why I thought we had probably a bit more overall invested or a bit more capital gains in that pie, because we can see here Bank of America in 5th position is up over 50%, and JP Morgan & Chase is up 57%. Now again, these are the 2 best performing financial stocks in my pie, so again that's why I was kind of in my thoughts. I thought it was a bit more kind of gains in that pie, but again, it's still the 2nd best performing pie in my portfolio, so I'm happy nonetheless. Now I mentioned earlier as well, my energy pie, the iShares Global Clean Energy ETF was kind of keeping or putting this pie down in terms of performance. For example, here in 3rd position, we have the kind of older school stock in the energy sector in the form of ExxonMobil, which is up an impressive 67.37%. We then have a technology company in 2nd position in the form of Alphabet Class A or Google, which is up 86.5%. I'm very happy there as well. And in top position, another financial company. So again, 3 financial stocks in my top 5 performing at the moment in the form of Goldman Sachs, which is up 91.87% and has the potential to be my first 100% stock increase. So again, I'm quite happy with the kind of diversification here as well, although 3 of the top 5 are in the financials. We also have an energy and a technology company as well. So now that we've seen how my overall sectors and my best performing stocks are performing at this moment in time, it kind of poses his age-old question of when should you take profit. Now over the past probably 6 to 8 months, I actually have not sold a single share of anything. So I've just been buying more to the dollar cost average. So it does kind of pose the question of when is the time to sell, or not even sell the whole position as such, just to take some profits. For example, there we can see my top 5 stocks are up between 50 and 91% at this moment in time. So again, there is huge kind of options there in terms of taking some capital. Now again, that capital increase probably isn't huge at all. For example, my best performing sector at the moment is up about 400 and something euro, which isn't a whole lot at all, I know. But again, it does start to kind of pose the question of should I start taking some profits, because in my own personal opinion, and the opinion of a lot of others as well, is that there is a potential of a crash over the next few months and the bull run coming to an end. Even though there mightn't be a whole kind of full-on crash like 2008, for example, again, markets have to go up and down in value as cyclical cycles have to take place in order to have a healthy market. So I do kind of want to start taking some profits and kind of have some cash on the sideline and have that cash reserve or profits locked in to take advantage of when the markets do drop again. Now again, at this moment in time in Ireland, where I currently reside, it's about €1,270 in capital gains that you don't have to pay. So anything over that increase in profit and loss, you have to pay a capital gains tax of 33% at. So at the moment we're up about €1,888 we can see here, which means I'd be liable for about €600 in tax at a rate of 33%. So again, that's only if I sold my entire portfolio and started to reinvest again. So I could even just sell €1,200 worth of profit. Again, I wouldn't have to pay any tax and just pump it back in for next year's investing as well. So kind of in summary or synopsis, the 2 things I'm currently trying to debate at this moment in time in terms of the portfolio is firstly tax. Now again, you're trying to get away without paying tax as much as you can, obviously in the legal way. So that is, I have a €1,270 cutoff point that I'm exempt for paying tax from in this country. Again, I believe that should be a lot higher, but again, I don't make the rules. So that is the first option here, if I should take advantage of my tax relief. And the second option, again, or the second thing on my mind, is the fact that there could be a crash on the horizon. Now, again, if as a long-term investor, I won't be selling all these stocks and just taking the money out of this portfolio. If anything, I'll be investing even more. But again, just kind of taking out some profits and locking those in. I'll be very interested to know in the comment section below, firstly, kind of because of this whole video, the theme of this video, how your best performing stocks are performing, or sectors, and how much they are up, and even your worst performing sectors as well, because again, no one can have 100% be or 100% correct all the time, and everyone has to have some reds in their portfolio from time to time. And second of all, your plans going forward for your portfolio. Do you plan on investing more, or do you want to start loading up on cash on the sideline? I'd be very interested to know all of those in the comment section below. So thanks very much. That kind of brings the end to today's video. I just wanted to go through how my overall portfolio is currently performing in terms of sector performance, and made a look at my top 5 stocks. Thanks very much, and I will see you all in tomorrow's video.